which I think is the biggest difference with the last cycle, right? You didn't really know how much of it was rehypothecated with Genesis, with BlockFi. You didn't really know who was depositing. You didn't really know like the strategies, who was that lent to.
What do you think is causing this divide? Is the leverage just moving elsewhere? We don't have the data to see it. So, or is there something else that's going on that's kind of causing this skew between perception and reality?
How do you see ETH treasury companies deploying their capital on chain? Will they do that? And then how do you see that affecting either? Welcome back to The Roll Up. We are your hosts. I'm Andy.
I'm Robbie, and this is your home to learn from the biggest guests, the brightest minds at the tip of innovation.
Our goal is to help spread the collective knowledge of everyone in our community.
We are breaking crypto out of its echo chamber and taking it to the real world.
Lorenzo, it's good to have you on the show. Good to see you last week or the week before, a couple weeks before, whenever that was. What's up, man?
Yeah, awesome to be here, guys, and yeah, great to be on the show.
Man, Bitcoin's crashing, man. 110, 111. The market's freaking out today. What's your read after 𝗵𝗵𝗃𝗃 on Jackson Hole came out and basically was very dovish? I think surprised a lot of people. I think a lot of the markets took that as a sign to go to the upside today and over the weekend. And yeah, it looks to be kind of bloody Monday out there for Bitcoin and some of the coins. What's your read today?
Yeah, look, like we're actually like pretty long-term focused, honestly. I think like daily swings like this, like where we don't pay like too much attention. I think generally, I mean, you've seen, I think ETH went down to 4.1K, and then basically we tested the 5K. It was, very quick, and now I think we're at 4.5, 4.6. Yeah, honestly, I think just like ARK, the type of funds product that we have, and also just in general, like the thesis doesn't really change. So yeah, we don't pay a lot of attention, honestly, to daily swings.
Yeah, plenty more interesting things to discuss here. And I think,
all right, Rob.
I think, well, it's just, if you get wrapped up in the short term, I mean, you're gonna get tugged around like the market. Yeah. So I take it that most of the investors in ARK are also long-term focused, right? So that you kind of represent your stakeholders here. What is the thesis that you guys believe in? You have stakeholders that believe in it as well. What are some of the general trends that you are placing bets on, and that you see from these stakeholders there's interest to also align with digital gold or future of payments or future of finance? What are some of these things that you seem to really stick in the investors' minds?
Yeah, it's a good question. I mean, look, we've been really early to Bitcoin route. I think we were one of the first kind of public asset managers to give our clients exposure to Bitcoin through GBTC. This was like in 2015. I wasn't at the firm, but I don't even remember what Bitcoin was trading at. But generally, like, obviously we think we've published models on Bitcoin, so we're very excited still about store of value thesis on Bitcoin. We're obviously, we're also invested in Ethereum and Solana and kind of the smart contract. And we think I think while Bitcoin was very easy to get for TradFi in terms of narrative, I think smart contract L1s have been, tougher to explain, right? It's not that easy, the tokenomics, they change their protocol upgrades. I think the narrative is just messier, right? I think now we're starting to see things churn, and I believe just it will take time, right, for a lot of the L1s, and then kind of DeFi tokens and longer tail of assets. So we spend like a lot of time. I think obviously we're very excited about stablecoins and RWAs right now. I think if you look at the space right now, it's very hard to see 10 to 100x more growth without RWAs taking off, really, right?
Yeah.
If you compare like the two cycles, now we're at 4 trillion, but like 2 trillion of that is Bitcoin, basically, which, in DeFi doesn't really count. So if you compare like TVL from, this cycle to last cycle, it's pretty much the same, right? And most of that is really like ETH appreciating in price because, a lot of the money markets, Morpho, AVE is just like the price of ETH kind of increasing, right? And that kind of pumps the TVL. And so I think for us, like looking at, the next kind of 2 to 3 years, it's very hard. And that's why, we're very bullish on, we're very excited about stablecoins and RWAs, is just because it's hard to underwrite, 10 to 50x growth in the next year without seeing more of the TradFi assets kind of coming on chain, right? And I think that's a realization most investors are having in the space. And so, when you see a lot of these, we've had Robinhood announcing, that they're doing L2. We've had, Denari, I think on Avalanche, Circle with ARK, and I think there's going to be many more. Right. I think that is really the thesis for the next, year or 2 years is really TradFi meets crypto. And I think, we're very excited about that.
Introducing Extended exclusively on Starknet, a next-gen perps trading platform live today. With 50 plus trading pairs from crypto to TradFi, you get the best experience on chain today. Deposit in the community vault for attractive returns, EMV compatible, and engage in unified margin, spot trading, lending, and perps trading. Exclusively live at extended.app on Starknet today. On that note, Lorenzo, when you're looking at the ETH treasury companies, how much impact do you think these ETH treasury companies seeking yield will have on the actual DeFi products that you mentioned, the Morphos, the Aves, the Ethenas, the stablecoins? How do you see ETH treasury companies deploying their capital on chain? Will they do that? And then how do you see that affecting either usage, valuation, TVL, et cetera, of some of these larger DeFi companies? And, is that part of the thesis?
Yeah, it's a good question. I guess we can talk about that like broadly because obviously MicroStrategy has been around for, a long time. And we had, for kind of 2 to 3 years, we didn't have any Sol and Ethereum DATs. And in the last kind of 2 to 3 months, we had, 1,000 launching. So I think it's pretty interesting. Look, I think the DATs in general, they're interesting. And, we're still doing a lot of work on it. We've been, doing a lot like in the last 2 months. But I think the biggest realization to me is public markets are so much bigger than crypto. Then I think that is kind of the main appeal of these DATs, right?
Yeah.
If you think at even for tokens like Ethereum and Solana, we don't really know how it's going to play out in terms of the spot ETF, right? In terms of staking or not, that's still to be determined. But even for Ethereum, where right now, I don't know if you've seen, guys, but I think there's a 13-day staking queue right now, and so you can imagine that spot ETF are probably going to be able to stake less than 50% because of liquidity reasons. Mm-hmm. And so how much multiple do you kind of you put on that yield, and that basically revenue that the DATs are going to get on a yearly basis, right?
Yeah, but Lorenzo, I think you're missing the idea of like liquid staking being just as profitable as actually owning a validator. Like, why would anybody do a validator when you could just toss it into Lido? I guess there's more risk.
Yeah, I think if you're looking to allocate like ETH and Sol then into DeFi, I'm not sure, like from a compliance perspective, a lot of these teams are actually going to be able to use liquid staking protocols. Okay. We'll see. But I think for us, that was kind of an interesting part of the DATs, where I think it's an interesting wrapper, an efficient wrapper if you look at the yield. And also obviously you have the arbitrage with the 𝗵𝗵, right? And we'll see how that is going to play out. But I think I've posted this, and this is all public. But if you look at a few of the DATs, I think it was BitMine on on the span of a month. Ethereum went up 60%, but they actually increased the ETH per share by 130%, for example. And so I think it's going to be interesting to see how the multiple plays out on a lot of these. But as long as they're trading above one mNAV, they're going to continue to do these ATMs and basically arbing that and increasing the ETH or kind of SOL per share. So that is one thing. I think the other thing, Andy, is, as you said, is a lot of these, and you guys have seen it, the Zilla, which is basically, they're going to allocate to DeFi. We'll see how that plays out. I'm not sure the risk that you're taking to get the marginal yield in DeFi is actually worth it when you can actually increase your ETH or SOL per share by leveraging the mNAV, right? And so I think you have to ask yourself, even on Solana and Ethereum, you can get like 3, 4, 5% like pretty easily. But when you get to like high single digit, what risk are you taking? And I think, that's probably a question that probably an answer we're going to get, from some of these DATs. So I think in our head, we're still doing a lot of work. I'm not sure, we're just not sure the value add of deploying on chain and getting into riskier kind of strategies is actually long-term the most sustainable, strategy.
And anyone not already following Lorenzo should be following Lorenzo, because he is severely underfollowed. You posted a picture about the relative leverage that is being taken into place in the market nowadays versus back in 2021, when we had a lot of centralized finance, Voyager, Celsius, all these guys blew up. And so what I think the market perception is that these DATs are super levered and they're going to blow up any second. But when you're looking at the data, you see that this space isn't as levered as it was back in 2021, not by a long shot. And so what do you think is causing this divide? Is the leverage just moving elsewhere? We don't have the data to see it. So, or is there something else that's going on that's kind of causing this skew between perception and reality?
Yeah, I think, look, like the picture I posted, I think it was like a Galaxy report where they do like a tremendous job on the research side. And obviously, if you compare, in terms of lenders and leverage where we are today compared to last cycle, obviously we had, the Genesis, the BlockFi that actually blew up. But if you look at the percentage right now of CeFi and DeFi, DeFi is much bigger as a percentage of borrow lend than it was in previous cycle. And that is mostly if you look at DeFi, that is mostly Aave, Morpho, Spark, and a couple of other, which are really like dominating the space. So I think in terms of leverage, we haven't seen any spike. Most of that, again, are on protocols that you can actually monitor. Aave, Morpho, everything is on chain, even Maple and the other protocols, which I think is the biggest difference with the last cycle, right? You didn't really know how much of it was rehypothecated with Genesis, with BlockFi. You didn't really know who was depositing. You didn't really know like the strategies, who was that lent to. And so, I think people are getting a bit stressed, obviously, because we're entering the fourth quarter. And the cycle, if you see the 4-year cycle, obviously we're kind of getting it to the end. And so people are looking for, signs of leverage, which is obviously some of the, the early signs of the end of the bull market. But I do think, if you compare it to last cycle, we're not there like on a nominal kind of on nominal basis. And I also think the quality of leverage is just like is much more transparent, right? Because it is in many of these platforms, and we haven't seen actually, centralized platforms like BlockFi, Genesis to that size popping up, which I think is very good and kind of healthy for the market.
Yeah. Yeah, it is. And yeah, it does. I mean, I've just been seeing tweets like, oh, we're in the 8th inning, we're in the 9th inning. I mean, I don't know. People spend too much time trying to find the top, I think, and really just zoom out. One other thing that you posted recently was about Ethena. Ethena's been getting a lot of traction with regards to actual stablecoin market cap growth recently, in addition to just general like mind share and kind of appearances on my timeline. And what's interesting is that their mechanism is literally designed for lower rates, right? The lower rates get, crypto speculation theoretically goes higher, you get a better basis trade, you get better yield, whereas other stable coins, as the rates lower, Tether, USDC, the yield on Aave, the yield on Morpho declines, in Pendle, et cetera. Kind of get like this dichotomy here, which works well in Ethena's favor. When you're looking at Ethena, other stable coins, this general kind of landscape here, how do you anticipate, let's say we get a 25 bips or 50 bips cut in the upcoming Fed meeting, and then, maybe over the course of the next 3 to 4 Fed meetings, we get a total maybe of a one basis point cut. How do you anticipate that affects the DeFi landscape, which feels like people are so entrenched in the current setup, which is like a 4.5% to 5% rate kind of environment? How do you see lower rates changing the DeFi landscape? Let's say we get that over the next 6 months, 1 basis point or a little more down.
Yeah, I think it's going to be very beneficial, like, overall. If you look at, rates right now, they're at 4.5-ish, right? And so they're kind of on par with DeFi rates, like with on-chain rates. I think once they're going to go down, you're going to see actually DeFi starting to be much more attractive, on a comparative kind of basis. So you said that, Andy, like, I think if you see Ethena kind of yield on SUSDE, I think on a trailing, 7-day, I think it was like 17-18%, something like that. And so I think right now, obviously, with rates as they are, like, DeFi is less appealing, right? When you start to have like rate cuts, you're gonna have kind of more speculative behavior, and so you're gonna have more leverage being taken on, on ETH, BTC to take out loans and basically borrow USDC. And so I think we're gonna see rates on chain go up, and that is going to attract a lot of capital, right? I think that's the most interesting phase, is when you actually have a delta like pretty big between TradFi rates and on-chain rates. And so I think all the borrowland protocols that you've mentioned, I think they're going to be big winners. Ethena, obviously, I haven't checked how much of the open interest Ethena is right now globally.
Yeah, it's a lot.
I think, last time I checked, I think it was 9-10%, but I know they're now doing the same strategy with Bitcoin and perhaps like another token. So we'll see how big they can get. I'm sure like the open interest actually grows faster than the price, right? Like for if you increase the price by 20%, I'm sure the open interest actually grows even further. So we'll see. I think the real test is, if you look at previous cycles, right now it's really like Tether and Tether and Circle, dominating the space. For stable coins like both Ethena and Sky, you kind of have to get to a certain level, right? Like the 20-30 billion threshold, like the 20 billion threshold, I think has never been touched by even Sky, like in the last cycle. And so I think it's going to be interesting for Ethena to see if they can actually get there, right, and get in size. I think at least like the same order of magnitude as Circle and Tether. And I think the next phase is really like centralized exchange. Ultimately, like if you want, USDS and USDE or even SUSDS or SUSD to be kind of accepted broadly, you're gonna have to have you need more of the centralized exchanges to accept the stable coins, right? As collateral for perps, as margin. Like without that, I think it's very, very difficult to envision, growing kind of past 20 billion. And they remain a bit subscale, right? Because like Circle and Tether are just continuing to grow. So I think that's gonna be very interesting. I know Ethena, they're also working like on Converge, the L2 would securitize. And so I'm also very curious there what they're preparing. I know they've announced, Pendle, Aave, like a few early protocols to deploy on Converge, and I'm sure there's going to be a lot of intersection with like tokenization, obviously, as they're doing this with Securitize. So yeah, I think just broadly, very bullish. I think it's going to be a catalyst for a lot of the on-chain protocols and a lot of the stable coins as well, such as Ethena.
Yeah, and Lorenzo, you kind of you alluded to this with Converge, and also in one of your previous tweets with regards to Circle's ARK and Stripe's chain as well. You've kind of put out a funny tweet saying what's more likely, them to be an L2 or something else. But what we kind of have now in this stablecoin chain game is you've kind of got like the Plasma and the Stable, which are like, I'd consider them more like crypto native Tether chains. And then you've got like Stripe's chain, which I'm blanking on the name. It's something.
Tempo.
Yeah, Tempo. And Circle's ARK chain, ARC, not ARK. And so you kind of got like this, like these two different like subsectors of these chains where I see like Plasma and Stable are very similar. Plasma's token is already like pre-market trading at like 5-6 bill or something. Stable is a little bit earlier in development. And then ARK and Tempo are obviously kind of still in development. Like, how do you reason about this? Like, what is your mental model for these stablecoin chains, these payment chains right now? How do you reason about their token? Do they need a token? How do you reason about whether they're kind of like real, in the middle, or grifty? How do you reason about like, is it a viable thing to invest in? Like, just kind of like curious what your mental model is for this kind of like stablecoin chain landscape.
Yeah, and it's a really good question. And I think, we're still kind of looking at the landscape. I think it's very interesting because every cycle we kind of, retry the corporate chains, right? Like if you look at Lira, like XRP, like we always get a try like every cycle. And also I think, what it means to be like an L2 or like a, just an L1 EVM chain that on its own, right? I think, for just to talk about Circle and ARK, like very quickly, I do think like the DeFi infrastructure right now is not mature enough for really the use cases that Circle is looking at, right? They're really going after, the TradFi markets, banks, brokers, and ultimately, I think, a lot of these players, they need like reliable fees, like reliable low fees, right? Like if you have like a meme coin launchpad on your same L1 and the fees is spiking, like that's not going to cut it, right? For a TradFi kind of institution, like that's the reality, right? Like even if you have like a fee market, they want to know exactly how much they're going to pay. They need like, dark pools. Like I think like 25% of the public kind of the equities market is traded on dark pools. We don't have that infrastructure. Privacy with ZK is extremely expensive still. Like even on public blockchains, you need to be able to have rollbacks, right? Of transactions. You need to be able to have kind of metadata with the transaction that you're sending. Invoicing bill is just like I think a lot of things that right now in DeFi, and I think we're going to get there, but they're either expensive or they're not there yet, right? And I think if you look at kind of the CPN and the ARK blockchain in general, you need that to onboard to have like FX markets or like even, you know, the equities markets. You need that, right? And so I think that's kind of one thing, you know, we've been thinking about. The other thing is, you know, it's still EVM compatible, right? And I think a lot of people wish it was like an L2. But if you think about it from an economic perspective, at least for ETH, the asset, like L2s are paying basically nothing to ETH, right? Like in terms of data availability, right? And so economically, Ethereum, the base asset, is not losing much, right? And USDC is already centralized as a product, right? I think many people don't realize that, but USDC and USDT are freezable, right? And so I think the fact that they can also be transacted on a chain that is a bit more centralized, you know, with kind of proof of authority, it is not really a big change. I think overall, you know, we'll see two different tactics. Obviously, some going more the centralized way, and some like, you know, Base and Robinhood that are still deploying on L2. And I think they do have a roadmap to kind of decentralize the sequencer and, you know, having more kind of the Ethereum ethos. We'll see how that plays out. But I think it's definitely, you know, again, this time is different, right? I know you never have to say like this time is different, but just in terms of scale of stablecoin and use cases, we now have a lot of use case outside of crypto, right? A lot of the emerging markets, a lot of people are using stablecoin for other things. And so I think it's going to be very interesting to see how it plays out. I think overall, it's still very accretive to Ethereum and EVM in general, but we'll see.
Yeah. Lorenzo, I just got one last question for you before we let you go. You had another tweet about an on-chain IPO. And then in the same spirit of this tokenization and bringing more of this on-chain, how do you expect this to play out? What's the structure that you have in mind? Do you see this mostly for crypto native companies that are looking to go public? Or do you see this as a mechanism and a method for really any company, crypto or non-crypto, to access deeper liquidity and launch something on chain? How do you see this playing out, and what's the structure? If a company's listening and they're thinking about doing something like this, how would they go about doing it?
Yeah, it's a good question. Actually, you know, it's funny because like when TradFi markets are hotter than DeFi markets, you start to have founders wanting to do IPO wrappers instead of launching tokens. And when the DeFi markets are kind of hotter than TradFi markets, you start to see like centralized companies that should probably do an IPO that want to launch a token, right? So it's like, I think it's just very interesting. Yeah, to answer your question, I think the 𝗵𝗶𝗃𝗃 was actually really interesting for that. They raised, I think in total, they raised more than $1 billion. Correct me, guys, if I'm wrong, right?
Yeah, I will.
And you look at the Circle IPO, the Bullish IPO. I think Circle raised a bit more than $1 billion, and Bullish, I think they ended up raising 700 million. I think you just realize that, you know, DeFi right now has pretty deep liquidity, right? If you wanna do an ICO kind of on chain, this was probably not the case, you know, 2 or 3 years ago, but now you actually have capital to do so. And so I think, Robbie, like initially, yes, it's probably going to be, you know, crypto companies, or at least like, you know, companies that are that have some kind of you know, have trading or crypto within their business. I think we'll see many of them, and you're already starting to see this, like getting their shares like tokenized natively, right? Like on the blockchain. And I think at some point you're going to maybe see the tokenized shares being more liquid than actually the TradFi shares, right? And at some point, I would imagine that, you know, maybe like a company is going to decide to, okay, like we're going to do like a full kind of on-chain ICO, and we're gonna leverage you know, blockchains. I think we're definitely going that way. We'll see who gets the kind of, do the first jump, let's say. But yeah, overall, I thought, pump was very interesting because that is like the order of magnitude actually of ICOs in TradFi markets.
Mm.
And I actually do see a lot of, I think in general, like people are excited about tokenization, but they say, okay, like it's just going to be a representation of the share on chain. I actually see that a lot of new use cases, and I'm very excited actually, being able to do, new strategies. If you see like the 𝗃 fund for securitized, like
Yes.
𝗯𝗲𝘀 is doing like, and so I think, even, that intersection with prediction markets, I think people really underestimate like the number of new products and new ideas that we're going to have with tokenized shares on chain. And so I don't think it's going to be just a representation, right? Even having perps, perps on a Tesla stock or perps on an NVIDIA stock, like that doesn't really exist. And the real perps, the real crypto perps. So that, is obviously one thing that comes to mind, but I think we're going to see, net new innovation because of that. And I'm actually very, very excited about that.
Beautiful. Yeah, I mean, look, I put out a tweet that was like, I think all of the actual action and real progress is happening in all of the unsexy areas right now, which is like stablecoins, payments, enterprise, tokenization. I mean, tokenization is kind of cool, kind of sexy, but not really. Whereas like, 8 years ago in 2017, this is where we were all focused, and somehow we got distracted along the way, and now we're like right back to like, let's solve the core problems that crypto can solve. So Lorenzo, appreciate you coming on, man, and we'll speak to you soon, and have a great rest of your evening and day today.
Thanks, guys. It was awesome having me. Thanks.
It was a pleasure, man. Speak to you soon.
See you.